Welcome back to the Funding Blueprint, your go-to destination for all things startup and innovation. I'm your host Abraham, and today's episode promises to be a captivating exploration into the realm of venture capital, featuring a special guest who leaves a lasting mark in the world of fintech investment. Joining us today is Sanchit Dote, an investor extraordinaire at Outward VC, a prominent venture capital firm headquartered in the bustling hub of London. With Outward, Sanchit plays a pivotal role as a founding team member, spearheading the quest for groundbreaking fintech startups that have the potential to redefine entire industries. His expertise extends across the entire investment lifecycle, from scouting promising opportunities to diligently executing investment strategies and providing ongoing guidance to portfolio companies. Before his tenure at Outward, Sanchit amassed invaluable experience as a seed-stage investor with Beacon Capital, where he fine-tuned his instincts for identifying and nurturing early-stage technology ventures. Now armed with over a decade of industry experience, Sanchit is at the forefront of shaping the future of finance by backing visionary entrepreneurs and disruptive innovations in the fintech space. Sanchit, welcome to the show.
Thanks, Abraham. Great to be here, and look forward to it.
Let's jump right in. So, I wanted to ask you, you've been in the trenches of tech growth for over 10 years now. Can you share some surprising or counterintuitive lessons that you've learned about the evolution of the fintech landscape?
Sure, absolutely. So, Abraham, I guess as you and probably the listeners will know, there's been a huge amount of growth in the fintech space over the last decade. A lot of that has been driven by new and sort of younger players in the space. So, I guess from my perspective, I guess being a sort of younger investor in this space, perhaps more naive, I would have expected a lot of that growth to come from sort of new players and startups disrupting the industry. The word disruption is sort of banded out there quite a bit. But actually, one of my sort of like key learnings being in this space is really that the incumbent providers and sort of the legacy systems in the space should not be underestimated. So if you look at particularly the incumbents, people look at them and think, okay, yes, they're not great at innovating, they're slow moving, they're sort of oil tankers, for want of a better word. But really, I think if you look at how they operate, they have a huge amount of distribution, they have a huge amount of resource. And from what I've seen, particularly, you'd be surprised with their sort of ability to eventually get there in terms of adopting fintech solutions or their ability to innovate. So I think whilst there's a huge amount of opportunity for startups to come in and sort of shake up the status quo, I think actually appreciating the incumbents and legacy systems, legacy providers for what they are, and being aware and sort of coming in with your eyes wide open is quite important in the space to be able to survive long term. So that's probably sort of like lesson number one. Lesson number two, I would say, would be more around how people approach this space. So I would say starting a fintech or investing in a fintech in a sort of specialist or niche area is kind of underrated in the space, almost in a way. So if you think about, people have sometimes look at the space and romanticize about sort of a super app to manage all your finances or super sort of banking app, etc. But I think if you look at any sort of successful fintech company, you see a trend where most, if not all of them, have really started from a specialist area or a niche area where they've got quick wins and they've been able to solve a sort of like quite a high value problem and then almost build from there. I'll give you a sort of example, right? If you think of Revolut, which is one of the most successful companies coming out of the UK, which is our home market, they initially started with a very high value consumer area, which was, I travel, but I spend a huge amount of that on my FX fees abroad, right? So how do I bring that down? And that was their initial hook almost. That was their wedge to get into the space. And then from there, they've sort of turned into this behemoth where, they're sort of tackling problems for the consumer far beyond just the FX, right? The banking, crypto trading, whatever their needs are, insurance, etc. Right? So that's just one example, and there's loads of other examples where companies have been able to sort of attack a niche and then build from there. And I think that's a great strategy and a great playbook to learn from. I mean, even now, right? We're now a higher interest rate environment than we were a few years ago. I'm now seeing companies, even on the B2B side, using that as a wedge, right? So providing sort of treasury solutions to other companies, and then from there perhaps growing and sort of offering other solutions to the office of the CFO. So I think that sort of playbook for me has been very interesting to sort of observe as an investor, from the sidelines. I think in general as well, just going back to my earlier point, I think anyone that sort of sees the power in collaborating with incumbents or going sort of and starting in a small niche is super interesting as a way to sort of grow in the fintech space.
Fintech is really a constantly changing beast, right? Obviously, as each year goes by, we see new and innovating and emerging companies that are evolving. What strategies do you recommend for early stage fintech startups to ensure that they're future proof and they're adaptable?
Yeah, so it's a great question. I would say if you think about fintech broadly as a sort of space, and again, sort of touching on a little bit on my point earlier, it's really a battle between sort of incumbents and startups in a way, right? So as I said, the incumbents are the ones that almost have the distribution by default, because they've been around for such a long time, and the startups are almost like bringing the innovation to the table, bringing the sort of superior customer experience, the slick technology, all of that. So I think anyone that's in the space wants to look at that collaborate, sort of almost like collaborating with those traditional systems and those traditional players in the space, like quite early on, and almost utilize them for like adapting like their sort of resources to almost get out there, right? So that's one part of the challenge. And I think if the earlier you can build that relationship with an institution or incumbent, the more you're sort of putting yourself on the right path for success. The second thing I will say is like I think again you look at like most successful companies, you see that their ability to adapt, as you said yourself, right? Like the ability to like adapt to changing consumer preferences or the market changing. We've gone from a sort of zero interest rate environment to a high interest rate environment. So I think anyone that has that sort of chameleon-like approach to be able to adapt in different sort of seasons almost is going to be a winner. And that's sort of what we look for as well in our investments. And I'll just give you an example, right? So I guess if you think of anyone in the sort of consumer fintech space, right? You now have to look at what the next generation of consumers want almost, and that's the sort of Gen Z customers, right? And how do Gen Zs interact with financial services? Like, think about it. It's like so different from millennials, right? It's so different from the generation before them. So if you think about like where they spend most of their time, right? They spend most of their time in, for example, gaming, right? Just to throw an example out there, right? They're in gaming apps. They're very, their sort of their social life revolves around gaming or social media or chatting to people on there, etc. So almost like if you think about like perhaps even their first experience of interacting with money or using financial services, maybe in that context, right? Just as an example, right? So they may have a card or some digital money or something else that they spend on over there. So if you're a consumer fintech, really, I mean, you're obviously drawing on your own experiences as a consumer, but you need to be very acutely aware of like where the next opportunity is and how to reach these customers, because you have to be able to almost like speak to your audience. It's one thing which is like adapting a business model or adapting to a new market, but this is almost like nuances within an existing market that you need to be sort of like quite aware of. So I think that's like super important for anyone that wants to win in this space. And then I think the last thing to say is like most fintechs that have been successful, their successes come pretty quickly. And I think you need to be able to handle that quick growth almost in some ways. So having like scalable sort of infrastructure and systems like built early on from the ground up is like quite important as well, I would say, to be able to handle that sort of, when you do see the hockey stick, you can then sort of be equipped for it.
Right. That's interesting. You mentioned that so is it common to see that in the fintech landscape that you see early stage startups scale relatively quickly?
Yeah, I think, and again, it goes to back to my earlier point where I think when you find yourself resonating with a problem or a particular like ideal customer set, for example, particularly on the consumer side or even on the small business side, the growth can be pretty rapid, right? Because oftentimes that specific set of consumers or businesses are underserved because they just don't have access to that particular service that you're providing them. And so it almost becomes a need to have for them to adopt. And then once they adopt, they sort of tell their friends or other business owners or anyone else. And then you're sort of like on that train.
Right. Makes sense. So we've actually received tons of questions from our audience and listeners about navigating the fintech investment landscape. What advice would you give to someone that's actually looking to invest into early stage fintech startups?
Yeah, I think there's a lot I can say on this. So if you think about fintech as a space and where we're going, I mean, there's a famous quote from sort of Andreessen Horowitz on this, which is like sort of everything is fintech, right? So I very much subscribe to that actually, and I think whatever way you look at it, it's a huge opportunity, right? So every company will inevitably interact with financial services or fintech, particularly in the future, or there will be some room for them to incorporate fintech. I mean, you're seeing it now, right? You're seeing a sort of trend now of more businesses, you know, offering fintech solutions to their users as a part to keep them more engaged or monetize, or even a way to sort of extend brand value as well. So these are all ways in which we're seeing that sort of happen in front of our eyes. And what I will say is there's a huge amount of opportunity in this area just because the banking stack is very complex, right? So financial services is not easy once you break down its sort of individual constituent parts, right? And I think there's a huge amount of opportunity in sort of core systems, um, compliance as we move forward, right? The more data we have, the more, like with the proliferation of AI, particularly as well. I think your ability to KYC, KYB, and just keep within your compliance sort of limits is a big challenge for businesses. And then even like modern APIs as a service, right? There's been so much innovation in that space that I think taking those APIs to the next frontier is also a huge opportunity. So there's so many different areas where in which you can look at it, where you can almost see the sort of next wave of fintech coming. In terms of like where we're at in that journey, so um, fintech again, if you look at like the sort of last 10, even 20 years, there's a constant sort of unbundling of services for consumers and businesses, and then there's again like a rebundling almost that happens, right? So it's like sort of like it works in cycles. I think where we're at right now is services are unbundled, right? If you think of yourself from a consumer point of view, you can pretty much access things at the touch of a button in specific niches or spaces, right? From a fintech context. But the rebundling that's happening now is almost happening in a very different way to what it was previously, right? So this is going to drive like a huge amount of change, I think, and generally, I think there's a huge amount of like opportunity for anyone that's like really obsessed with owning the customer experience beyond just providing your basic banking or FS sort of services, right? So I think that so watch this space almost is sort of what I'm trying to say in terms of the rebundling. In terms of other areas that I would talk about, like there's definitely one area to look for anyone that's interested in investing in the space is around what's happening on the regulatory side of things. So if you look at open banking regulations and open finance being another one, which is now coming to Europe as well, it's all about banks and financial institutions sharing their data with third parties, but it also involves those FIs actually using the data for their own intelligence to know their customers better and appropriately sort of sell products and engage them, right? So I think any companies that are operating in and around that space will have a huge tailwind from the regulations. And there's a big challenge on actually making sense of a lot of this financial data that sits out there, both from an intelligence perspective, a credit scoring perspective, and then eventually, obviously, lending perspective, right? So I think that is an area where fintech is almost kind of unique in terms of it's one of the sectors where you can get a huge amount of regulatory pull quite quickly. So if you're in the right place at the right time with the right approach, you're sort of you can have half the battle won almost in that sense. So look, I think that's my general like rule of thumb when looking at this space, and I think all the other rules apply, right? Like for venture investing, as we've seen in other spaces. So we need you sort of want to look at people that have quite strong founder market fit, and you probably want to have people that have sort of almost built that. I spoke about that initial collaboration with banks and fintechs, etc. So have that sort of line of sight and can bring that vision almost to the table.
Gotcha. So right place, right time, right approach.
Yeah, well, yeah, I guess that's one way to sum it up. Yeah.
Awesome, awesome. So say that I'm a fintech, aspiring fintech founder, and I want to start this great idea and really hop into the fintech marketplace. What resources, from an early stage perspective, what resources can I turn to as a founder?
Yeah, I think before I comment on like fintech specific, I think my response initially would be more generic in the sense that I think this applies to any founder before they start their business is like obsess over your market research and make sure you know exactly what your target market wants and you know your space deeply and you've conducted the sort of like initial customer reviews before you even go out there and build a product and raise money. I mean, you'd be surprised by the number of people I do come across, a number of entrepreneurs I do come across that have, like super interesting, cool ideas, technologies, etc. But maybe the market research just hasn't been done to a level where it fills you with enough confidence that there is a problem to be solved here. So I think that's like absolute number one for me before we even talk about the fintech specific stuff. But I think particularly in the fintech space, if you're starting out, I think one of the things you want to think about very early on is that whole piece around how do you build your sort of regulatory compliance like quite early on. How do you build your risk management sort of approach and methodology early on? Because one of the things that you probably want to make sure is like as you scale, you have the right sort of framework and building blocks for risk management and your regulatory framework in place. Because as you scale, that's going to like stand you in good stead. It's one of those things where you can't really solve it later on. It's almost like too late. You need to make sure that all your ducks are in a row early on, and that'll save you sort of headaches down the road. One of the ways in which you can do that is particularly in the UK, and I know this exists in the US as well. There's a number of regulatory like sandboxes which you can go to as a founder. You don't even need to have your sort of like product launched or anything whizzy really with an idea, with a business plan, with a sort of sense of where you're going. You can approach these sandboxes. They run by the regulators themselves to test your idea, to validate some of your hypothesis, and then see the reaction from sort of people in the industry that are responsible for these sorts of things. So I think that's sort of obviously number one, like quite important in a fintech context. Number two, again, I keep sort of banging this drum, but partnering with an incumbent. I'm not saying it needs to be a formal sort of partnership or you need to get too close, but don't be shy and don't be afraid to have those conversations early on with like the big FIs and big institutions. They're big and they might feel daunting and they might feel like and don't be too obsessed about like guarding your secrets either, because at the end of the day when you're launching, everyone knows about your product, everyone will eventually get to the market anyway. So be out there, be collaborative, try and learn from others that have already been there. And I think also surrounding yourself with credible people from the sort of financial space is quite important, because again, once you're selling regulated products or you're selling to a regulated institution, having that credibility is super important. And then I guess just from a tech standpoint, particularly in fintech, my preference is always to see the tech sort of built in-house. So if a management team, leadership team can own that, I think it's super valuable. Having said that, however, there is a lot of existing infrastructure and almost like scalable solutions out there that are particularly built for like fintech applications, right? So there's a number of like as a service applications that you can leverage. So these things you should leverage in the early days, right? Because it's all about speed. It's all about testing quickly, iterating quickly. And I think you should be leveraging those things. You should be keeping your tech in-house. And then whatever you want to own in the future, you can build that optionality to build more of yourself or, create a bit more IP for yourself in that space. So I think keep your optionality open, but move fast when you're sort of early on. That would be my sort of general rule of thumb for like people that are entering the space as founders.
Well said. Well said. If I can ask you, what really prompted you to get into venture capital? This is more of a personal question. What prompted you to get into venture capital? Was it something that you've wanted to do since you were a kid, or someone that something you discovered while going through college?
Good question. So I went and did a sort of engineering degree at my university. I did a master's in engineering. It wasn't. It was not in software engineering or anything of that sort. It was actually in mechanical and manufacturing engineering. So very far from the sort of space that I'm in. I'm in today. While I was there, I'll be very honest with you. Half of my friends were sort of going into like city jobs, so like investment banking, private equity, whatever. The other half were going into like the proper engineering jobs, right? So into industry almost. And I almost got I was sort of almost bored of my degree by the end of it. I didn't want to go into like industry. I didn't want to go into banking either. And honestly, I didn't even know what the term venture capital really was. I was following tech startups because I've always been like very interested in tech, very passionate about tech. And I knew a few friends and some family as well that were involved in tech, particularly, but I didn't really know much about it from the outside. So I got drawn in that direction, and I sort of started following a few companies in the tech space that had raised money, and then that sort of took me into a bit of a rabbit hole almost to find out more about, okay, actually private companies can raise money, and this is how they do it. And I sort of fell into the space by almost by accident and a bit of right place, right time. I started helping private companies raise money from sort of angel investors, and then I sort of almost gained the trust of these angel investors that I was working with at the time, and they happened to be raising a fund, and then I sort of joined that initial fund, which was Beacon Capital, that you mentioned in my bio, and then one thing led to another. I sort of invested there for a few years, and then when the opportunity with Outward came up, I sort of joined here as a founding team member, and I think what I'm trying to solve, at least from my personal perspective, is my first few years in the venture industry was all about being a generalist. So it was very much like honing the art of investing, but it was across like a number of different companies, a number of different sectors, which is hard, right? It's like the context switching is real. It's quite difficult. But once we sort of laid the groundwork with Outward, the whole focus and the whole idea was to really specialize in fintech and sort of connected sectors almost, and create a powerful sort of vehicle that we think will resonate with people that are building in the fintech space, where they can say to us, okay, we want Outward and we want these guys on our cap table because we know they will actually help with the specific problems that we have. So that's how we're sort of going about building our portfolio.
Interesting. Interesting. So, what advice would you give to someone that, is eager to get into venture capital but just doesn't really know where to start?
Yeah, look, I think the reality is it's a very, very small industry. It's a super tight, super closed off industry in a way. And I think if you look at the bigger funds, there is typically a playbook associated with it, right? So you might have an MBA sort of outlook, or you might have a sort of few years in investment banking, or top sort of consultancies, and then you sort of make your way there, which is the sort of that's very much the cookie cutter sort of predictable way to get in in terms of the bigger funds. In terms of the smaller funds, and that's sort of where it gets creative, and where I live and where I sort of operate. The smaller funds, if you look at people's backgrounds in these funds, is completely random, and the data shows that as well. There's people like me that definitely don't belong in the space, right? Didn't sort of come from the banking world or anything else, private equity world or anything else. And there's people that are technical. There's people that have been previous operators. People that have been journalists, lawyers, all sorts of things, right? But I think the one thing that all of them have, the one thread that sort of joins all of these people, is like curiosity. Definitely, like there's you need to have a huge amount of intellectual curiosity, and there's a bit of like hustle and drive. And I think the way to almost like try and crack the space and get attention in the space is to try and sort of set yourself apart and be unique in sort of like what you're offering. So even if you're reaching out to a VC and you're showing them a deal, for example, or you're pointing them towards a space that you're interested in, give your unique perspective and tell them why you are betting on this. I mean, there's a lot of recycled opinion in the space, which happens, but I think if you can show a way in which you're either able to like rise above that or give a contrarian view or provide something that's valuable to not just that VC but also their portfolio companies, I think that sort of value exchange is super important. And if you can demonstrate that in everything you do, I think you can show that you could be a valuable member of any venture capital team, and not just that team but also their portfolio as well.
Awesome. So what you're saying is in essence to present yourself in a unique and authentic manner, but you have to really touch upon the fact that there has to be a value exchange between both entities in reality.
Absolutely. Because as I said, right, like there's the demand and supply curve here in venture is just off the scale, right? Like there's just a huge amount of demand to get in, but there's just not that many positions or opportunities or funds that are around to give people that opportunity, right? So I think if you can find an edge, and if you can look at an existing team, for example, in the fund and say, hey, actually they are missing this and this is what I bring to the table, I think that's hugely powerful. And that's kind of what we look for, right? We're looking for people that we don't have. I mean, if we're recruiting for someone that's new to the space, we don't have like a playbook, right? We're looking for someone that brings a bit of an edge to what we don't already have.
And that wraps up another insightful episode of the Funding Blueprint. A big thank you to our guest Sanchit for sharing his wealth of knowledge and expertise in the world of venture capital and fintech innovation. We hope you've enjoyed today's deep dive into the strategies, trends, and stories that shape the startup landscape. If you found this episode valuable, don't forget to subscribe to our podcast for more thought-provoking discussions with industry experts like Sanchit. For listeners interested in learning more about Sanchit and Outward VC, we'll have their links to the website and social media in the show notes. Until next time.